back for another market review trade setup for the week, this past week. Um, I want to start off by saying there's been a lot of, how do I say, misconception within the market, especially with the Fed's revisioning of jobs numbers throughout the week, um, in the past and previous, market updates as far as like job openings, unemployment claims, things of that nature. So markets have been kind of wishy washy this week. So if you're a trader and you actually understand what's going on, you understand what's going on. And I'll kind of give my thesis about what I think was going on at the end of the video. So we're gonna just get it started with my trade review, so you guys can kind of see the execution and how it is I use my system. So let's go ahead and get into it. So the first trade I took of the week was of Russell 2000, only because I knew that us getting some of these weaker prints and revisions, like I just stated, would kind of point us in the direction of cutting towards September. So the first trade I got in was here off of this anchor in the middle of London. Now I seen to open, well, to end the week. Let's see what day this was. This is Friday. We ended the week last week with this huge like anchor candle right here. And so coming into this week, I seen that we didn't come back to it. We kind of drifted away. So I was like, okay, we broke above the 50. I always use the 50 as the 50 is like the VWAP. If you guys don't know what the VWAP is, just do your research. But it basically shows you the sentiment of whether if it's a bullish trend reversal or if it's going to be a bearish trend. So I seen that we started pinning off of the 50 towards the middle of the London session. I got in here, but another one of my rules is I don't like to, if the trade doesn't go in my direction before the New York Open, I cut the trade. So at 9:30, you see this candle here. This candle could have been a lot bigger. This candle could have wicked literally all the way back down to here or wherever, all the way up here. So I was in this trade for already 2.5 hours. So the trade didn't start going in my direction, and I cut the trade pretty early. Sometimes you'll have those situations to where if price isn't moving in your direction, regardless of how good the setup is, sometimes you might want to cut it. A pip save is a pip earn. Don't ever let nobody try to tell you otherwise. A pip save is definitely a pip earn because the longer you hold a trade, the longer you expose yourself to risk. So I cut the trade. Wish I would have stayed in it, but it ended up going in my direction. Hit my TP of Thursday's London high, well, Friday's London high, and yeah. So you live and you learn. You know, Wish I could have got the trade back, but yeah. Um, and then I took a trade on. Okay, yeah. After that run up, I knew that we had the Fed posting to keep rates the same, like I stated the previous week. So after that huge run up on Monday, we got to close below the 50 to end the day on Tuesday. So going into Wednesday, I'm like, okay, we got a lower high from here to here, lower high, lower high, lower high, and we were pinning off this 200 right here. We were pinning right off the 200 EMA to close the Asian session. So I go here, we get the close below the 50, just a quick little retest, a lower high. Price kind of dwindled down, but we ran into a failed seller's auction. A failed seller's auction is where the price does not continue to go down. Price doesn't continue to go down. It got capped right here, right at this nadir almost of the Asian low. So again, this is probably a better time for me to cut the trade prior to the previous trade that I took that I cut early. But I held the trade and I got stopped out. If I was open and available at the actual desk, I could have reversed my bias and got into the longs here, but I wasn't able to be available during that time, during that 9:30 open. Which is why I also say I don't like holding my trades. If my trade don't go into the direction before 9:30, I'm kind of out of the market for today. So, but I could have switched bias and went long here and took the TP to the top. It's probably about a $400, depending on how many contracts, but just one contract is probably about $400. Um, and I'll show you guys too. A lot of the times, it's not really per se that you don't have the right, or you're not on the right side of the trade, but sometimes price action can do what you want it to do in kind of in inverse timings, because you can't control the market. The market is going to do what the market is going to do, but there will be instances, and I have a perfect example here coming up about how sometimes the market can literally just do the inverse of what you got going on as far as like a trade setup. That doesn't make you entirely wrong at all. It's just how the dice roll sometimes. So but yeah, this is a trade I took Tuesday, and another thing too, you can't revenge trade. Like, I could have chased this trade. Like, oh well, it stopped me out. Now I got to chase it long, because I could have chased it long. And look, what we have here. We have all this. We have literally all of this uh, structure here. It could have retested and continued going short. And if I would have chased it long, I would have been right back in the same position. So try to only take 2-3 trades a day. Don't try to overtrade. Don't try to chase it. I mean, it is what it is. As long as you keep the risk appropriate, and one to threes, one to fours. The next time you get that next opportunity, that one trade could probably clear up 8 trades, 4 trades, depending on how many contracts and all that, how much you leverage. But don't ever chase a trade ever, or revenge trade. So here is a perfect example of the market doing two inverse things, right? So here initially I went long here. We got the close above, right? We got the close above the 50. We got the retest of this nadir. The nadir is just the wedge part, the middle part of a W. So we got the retest here. I was just confident that, okay, we came here, we got failed sellers right here at the New York low. The likelihood of us continuing up higher is a good percentage. So I went long here, but the market didn't agree. So we got the failed sellers, and then we got failed buyers right in here. I'm trying to zoom in more for you guys. We got the failed buyers in here. So what did I do? At the close below this 50, I got back in the market, closed out of my long position, and got in short here for about a 1 to 2, 1 to 2.5. So sometimes you have to just swallow your pride and really just adjust with the market, because you can't control what the market is gonna do. It doesn't work that way. Regardless of how you may see it, it's not gonna work that way. Like, you could try, but you're just gonna blow your account. So this is a trade I took. This was Tuesday, going into Wednesday. Um, that I took. No, this was the same trade. This was Tuesday. So I took the Nasdaq trade, the short, got stopped out, came here, and went short as well. Gold went long first and then went short. And then I came back. Which day was this? I came back. Yep, Wednesday afternoon in the New York session, and took the long position, because I seen that we were pinning off this 50 on the 1 hour. The 200 on the 15 minute is the 50 on the 1 hour. If you didn't know, um, we were kind of pinning off of this 50 EMA on the 1 hour, and I wanted to go long because I knew. Oops, let's move that back. Um, I knew that we kind of got this long liquidity grab the day before, so the likelihood of them breaking this anchor, the anchor just means the last structured low or the last structured high that the market produced. So this anchor right here, I just knew that okay, the likelihood of us breaking this and it pinned off the 800 is very unlikely that they come all the way back down here. So I came back on the 15 minute. I came back on the 15 minute and seen that we closed above the 50, and I got in long here. So I got in long here. Wanted to take it all the way up to the previous day high, New York high, but I started to see that the market was kind of teetering out, just kind of going sideways up in here. So I closed the trade. This was like a 1-to-1. You're not gonna get every trade is not gonna be a home run. Every trade is not gonna be. You just have to take what the market give you and accept it and go on to the next trade. There's literally nothing you can do. You can't do anything about it. So that's what you gotta understand. So um, that was the trade I took on gold. Then I took one more trade, and that was here on the pound, not pound, but Japanese future. So here we chopped around, and then we came down here. We swept the liquidity from the London, the New York, and the Asian low on Tuesday, and we closed above the 50 EMA here, and I went long and took it. I got out somewhere in here because again I started to see it start to chop around, just like that gold trade started to chop around. And I just didn't want to stay in the trade too long, so I got out. This is probably like another 1-to-1 trade. So for the week, let's reload. Overall for the week, I'm break even for the most part. I lost $90 over the entire week. So I mean, it's not too bad. I understand it could be a lot worse, but like I said, a pip save is a pip earn. Always, always, always. Looking to do better this week, obviously, and just keep going forward. My win percentage is 46%. I'm about my risk to reward is like a 1-to-1. My average winning trade and my average losing trade are about the same. And this is my 25th day, about to be 26th day, on the account. As you can see, my track record here. This kind of looks sloppy. It's a lot. I don't like the Excel. Starting for the next video, next week I will have a trade Zella, and kind of be promoting that as far as documentation of my wins and losses, and actually showing you guys the percentage of my trades and based off the setups that I'm showing you. I'll have them all broken down and categorized, so like okay, a continuation trade or a pullback trade, or this is like a vector trade or an anchor trade, or break of yesterday's low or high. Those type of trades, I will have them all broken down, and you can see the win percentage, loss percentage, how much I made based off these kind of setups. More detailed right now. It's just kind of all over the place, but you'll get the gist. And I'll start doing more things like as far as what do you guys want? Like, are you looking to be more active day trading? Are you looking to kind of invest? Do you want to just get like the technicals? What is it that you're looking for, so I can help provide that for you? But yeah, all in all, that's kind of what I'm looking to do. Those are the trades that I took from the previous week. And now my theory on what's going on in the market now. I feel like they're confusing all this data to actually provide capital to continue to do these arbitrage type of assets. So like the micro strategies, the S bets, the BMNR, the ETHZilla that's coming out. I feel like even Circle, I feel like we're trying to diminish the dollar as much as possible in order to gain capital, in order to put into these new asset vehicles of crypto and decentralized finance. But along with that, this could transcend and possibly even transcend society as we know it. So That's kind of my theory. Don't get lost in the sauce as far as the data as of right now. I feel like there's a bigger play being made here. So just trade what you see. Don't overthink it as far as the week. Don't get caught up in the news. Don't try to trade the news. Definitely don't try to trade the news. And just trade what you see. And you guys will be all right. That's all I got for this one. Peace. And I'll catch you next week.